And I've seen some great founders. They're very careful with when they hire, who they hire. And, it's very tempting to overhire because they're like, well, I have 300 employees. Aren't I great? We're growing. But if your revenue isn't reflecting that, it's almost like throwing money out the window.
This podcast is brought to you by Fredrik Herstad and powered by Unlisted, the leading cap table management platform in the Nordics. Produced by Amplitude Ventures, your partners in early-stage music tech.
Hi, and welcome to a new episode of this podcast. This time we have Helga Valfells from Crowberry Capital with us. Welcome, Helga.
Oh, yes. Hello, Fredrik. Thank you. And thank you for having me on your podcast. I'm very excited to be here.
A pleasure to have you on the podcast. It's been a while since we first met. I think we met during Copenhagen, was it FinTech Week or
Yes.
Yeah.
Yes. Yeah.
Yeah.
Yeah. I think you're one of the great fintechs represented there.
Oh,
Representing
thank you.
Unlisted, yes.
Thank you. So please tell me a little bit about yourself and your road into venture capital.
I've been in venture capital for over 15 years. Started in venture capital in 2010, just after the financial crisis. Before I started in venture capital, I did a lot of different things, which is one of the things that makes one a good VC. So I worked in finance, at both in Iceland and in London for a big investment bank. I also worked for the International Red Cross in Africa. Also worked for Estee Lauder in the UK. I got my undergraduate degree in the US. I got my graduate degree in the UK, and worked also in Denmark for a little bit, as well as sort of in the US and the UK. So I worked in lots of different places, did lots of different things, but primarily finance, and I think working for an investment bank before I sort of went into venture capital was really interesting because I learned a lot about finance, I learned a lot about M&A, and I learned about IPOs and everything like that. However, it was a good school and worked with lots of great people. Wasn't for me because I think that sort of hardcore investment banking is all about the money, whereas I think venture capital is about building value and maybe creating jobs and investing in ideas. So it feels, to me at least, and how I see the world, a more purposeful mission, and also all about technology. Also, and I think I first became interested in venture capital around the turn of the century because I was part of setting up an accelerator here in Iceland, which is called Venture Iceland. They didn't call them accelerators then, but it was a training program for entrepreneurs on how to get capital. And got to meet all the startup founders in Iceland through the dot-com bubble and everything like that. But I sort of formally and did a few angel investments myself. But I formally became a VC in late 2009, just after the financial crisis. Worked with a fund here in Iceland, which was a government-owned fund. And I've been living in London, moved back to Iceland in sort of 2009. There were very few jobs advertised in the paper, but there was a VC job. And it was kind of interesting because up until then, there weren't very many people working in the industry in Iceland, but also no women were really investing in the industry. And they thought after the financial crisis, one of the things that they really wanted to do was hire more women into all areas of the business community. So I think gender equality increased a lot in Iceland after the financial crisis. And I spoke to the man that hired me, and he said we were very determined. We were going to hire, we needed more women. We needed to a better gender balance. So I think I was me and another woman called Svana Gunnarsdottir, who's still in the industry. We were the first women in Iceland to really be hired as professional investors into the VC industry. I was CEO of then I worked as a year on the investment team. Then I became CEO, and this was a publicly owned fund. Wonderful learning opportunity, wonderful colleagues. Was there really leading the fund from 2010 through 2016. But then you sort of realize it was owned by the government, and the more I learned about the VC, I really thought you had to do this as a private mandate. And venture capital is, in my personal opinion, if the government wants to invest in venture capital, is best done through fund of funds. So me and two other colleagues at this public fund, Jenny and Hekla, we were the three women there at the time. We all quit our jobs and set up Crowberry Capital, and we raised our first fund in 6 months. And so by summer 2017, so we're 8 years old today, we had raised our first fund, which was at the time around $40 million. And then we raised our second fund in 2021, and we've been investing across the Nordics for the past 8 years, and really have enjoyed the journey and met some amazing Nordic founders. Done a couple of exits now for Crowberry and are just continuing on our journey.
Great. Great story going into the venture capital. But I saw that you also were involved in what do you call it, Clark, like Icelandic startups.
Yeah, yes, Clark. So I was the chairman. I was on the board of Clark, and I'm now sort of a sponsor of Clark. Clark is sort of the sort of Icelandic startup um accelerator today. So I was involved in that, and I was, I think, on the board from 2009 till 2017. And then when we set up our own fund, because the funds are investing in the startups in Clark, then I've been very involved in that. And I just really believe, and one of the things I love to do is to participate in building a stronger ecosystem, whether it's on an Icelandic level, Nordic level, European level, or global level. I mean, I think, and it's really, really one of the things I really enjoy about working in venture is a spirit of collaboration. I know funds compete a little bit and founders compete, but overall is very much built around the sentiment, in my mind, of collaboration, as should be, because we're always creating value and we can work together to create more value.
Yeah, I
So I
love
love
that.
any, yeah, yeah.
I saw
So
that from your CV and also
okay,
like from the mission statement of Crowberry Capital.
yeah.
So
So
it's
we are
quite
very, yeah, and we love working with other investors, and
yeah,
it usually makes for stronger companies.
yeah,
And yeah, and I was sort of also. One of the things I've really enjoyed doing is building the Venture Capital Association here in Iceland. So we have a rotating chairmanship. So I'm currently the chairman of the Icelandic Venture Capital Association. And one of the nice things about the Venture Capital Association, it can do a lot of lobbying on a sort of national level, but also on a sort of across geographies. So I'm really hoping that I can sort of build a stronger link to the Nordic and the Baltic and other European venture capital associations, because I think we should all work together.
yeah, yeah. I agree on that. So on that note, like Iceland, not the biggest population. So, but how is this kind of startup ecosystem in Iceland?
The startup ecosystem is great, which is why it's nice to be. Obviously, we don't do all our, we do invest a lot outside of Iceland. So I think Nordics as a whole is a great market to be in. Iceland has a sort of small percentage of our deal flow, but larger than the population would indicate. So per capita, we get the strongest deal flow from Iceland. And Iceland, I think, culturally really lends itself to startups. If you work and I think this is maybe true of all the Nordic countries. If you live in a small country, it's difficult to specialize. You have to be a little bit of jack of all trades, which
Yeah,
is when you're starting a company is something that you have to do. You have to be able to do everything. And I think if you're from a very small population, then you have to do it. Also, I think the other interesting thing about Iceland is I think we're not only the geographic midpoint between Scandinavia and the US, because it's 3 hours to Stockholm and 4 hours to Boston. So we're a geographic midpoint, but I think in many ways we're also a cultural midpoint. We embrace a lot of the Nordic values, especially when it comes to the social side of things. But there is a very strong entrepreneurial spirit and that you can build things and do things. Iceland is a young democracy. It's really become it sort of didn't start becoming prosperous until after the Second World War. So there's been this whole kind of entrepreneurship drive for the last 80 years, and it sort of everybody has an entrepreneur in their family. Everybody has a relative who's built something. So I think this is a drive. A lot of people go to the US to be educated. And so people go to the US, they work for the tech, small startups or big tech, and then they come back to Iceland to start companies. So for us, this is amazing deal flow. So we're very happy with this kind of yeah, building spirit that we have here in Iceland. And I think per capita, Iceland is only second to Estonia in terms
oh, really.
of
Yeah,
startups per capita. I think Estonia, which is also a small country but bigger than Iceland, wins, and then it's Iceland. But then also, I think all the Nordics rank relatively high.
yeah, Yeah. So do you have like so Finland has slush. Like Iceland, do you have any kind of international kind of
Yes,
arenas for startups?
we have a really great event here, which is called Iceland Innovation Week, and it's held in May every year. We even had a Icelandic style heat wave this May, so we were having meetings on our balcony.
Nice.
And Iceland is very beautiful in May, so I think it's been growing. It still has a very much of a grassroots feel to it, almost like early slush. I've been going to slush since almost since the beginning, so one has seen how slush has grown, or early tech barbecue, and it's a little bit based also on the Norwegian Innovation Week. So you have a lot of you have
Yeah.
one main event and a lot of events going around town, and there's a nice vibe, and everything is in English. It's increasingly international, but obviously not as humongous as slush, and
Yeah.
we have a lot of light, whereas a slushy, it's almost you have a lot of darkness. So it's
Yeah.
the yeah.
Yeah. Cool. Okay, so I need to book in May for next
Definitely,
year.
you would be
Yeah.
very welcome. Yes,
Yeah.
I think,
Thank you. Yeah. Yeah, that'd be nice.
yeah, no, I'm sure also
Uh
the FinTech hub here would love to have you because they are part of Innovation Week, and I'm sure that they would
yeah.
love to have you speak or something like that, so it'd
Yeah.
be fantastic.
Cool. Cool. I'll make a note of that. Tell me about Crowberry Capital.
Yes, so Crowberry was founded exactly 8 years ago today, July 7th, 2017. And the three of us that set up Crowberry, and we really felt that we wanted to do a seed fund from headquartered in Iceland, but invest across the Nordics. So we're of a similar generation to Snö in Norway, Luminar in Sweden. They're all and by founders in Denmark, and Maki in Finland. So we're all kind of the same sort of vintage, and we've all sort of collaborated on deals and are all good friends. But it's
Nice.
the sort of having. I think there was no pan Nordic fund in Iceland. Very few funds here when we started. And that was really our mission, to build a best-in-class venture fund from Iceland, where we kind of have almost proprietary deal flow from Iceland, but we also participate in other Nordic deals. And we've been very lucky. We've invested in some great companies. One of our most successful sectors, which we're finding out now 8 years later, are video game companies. We didn't
Wow.
think that we would invest in games, and then we did one games investment, and we kind of were welcomed into this club of fantastic video game investors. So now that as our fund one is growing and maturing, we see our video game companies are doing super well. And so that's been an unexpected but great sector for us. And I also think in the Nordics, you just have really great teams and a lot of expertise and very professional people in this industry. So this is a very strong industry for the Nordics. So, and then maybe other sectors that we've doubled down is fintech. We've done some great fintech investments. We're investors in Monerium, in Iceland, which is sort of Europe's first real genuine stablecoin. We are in Finance in Denmark, which is building Noom, which is a AI CFO. Kiko Cloud in Finland. So we've done a lot of fintech. We've also done a lot of health tech. We're in Embla in Denmark, which is a digital health company, and Hemi in Denmark, a digital health company. Yeah, and then we do sort of B2B SaaS as well. So we do lots of different things. Also, last couple of years, we've been really working in dev tools and going into more deep tech. So anything technology we will do, but I think sort of games, health tech, and fintech are kind of where we started, and then we're kind of maybe going sort of deeper into other verticals as well.
Yeah. So it sounds like you're kind of industry agnostic then. Is that
Yes,
correct? Or is there
across
anything that
yeah, across the digital economy.
Yeah,
Yeah,
okay.
I think yeah. So we wouldn't do life science or anything like that, but anything
Gotcha.
digital, and obviously these days everything's about AI. So
Yeah,
everybody's an AI investor. So everything we do has at least some element of AI
yeah.
in it.
Is
And
that kind of a prerequisite now? Like, does it have to have something? Does it need to be
not
AI first, or just kind of leverage AI?
uh, I mean I really think you just do what's best for the company.
Yeah.
When I remember when I was starting in 2009 in venture, everybody was a cloud company.
Really?
Everybody was so, that was like, oh, we use cloud. We're better. And it's just like an available technology that makes your company more efficient. Now you don't even mention it. And
Mm.
I even when I was this Venture Iceland accelerator, I sort of around the turn of the century that I was involved in, then it was very much like everybody was a .com, and you couldn't, and now it's just like a location that you have to be at. It was just, yeah. So I think, and I'm sure AI will just become ubiquitous, and it is great technology. It builds businesses more efficiently, and obviously, and there's some AI. Also, we're involved in a couple of businesses that are really addressing the infrastructure layer of AI. We're obviously, yep. So I think that is, we're in a company, for example, called Sato, which is about AI governance. We're also in companies that are building for other AI companies. So that's maybe more the infrastructure layer. But then we're also in a lot of companies that are leveraging AI. And so I think, and also AI native companies like Lucidity, which is very similar to Strice in Norway, a little
Mm.
bit older, but very much building, have been building as an AI native company from the beginning. So I think AI is a great technology. Use it wisely and use it correctly. But I wouldn't rule out a company because they're not leveraging AI because maybe it's not right for that company, or they're using, and I think there's, as we've seen in the last 2 years, been a lot of AI washing. So people are complicating the journey by trying to add AI somewhere where it shouldn't be.
Yeah. So it's the new greenwashing, huh?
Yeah, exactly.
Yeah.
So
So, is there any particular things that you're kind of look for more than others when you invest? Like, or it could be anything from like into that company specifically, but also types of companies.
yes.
If you kind of look beyond the kind of the industry.
Yeah, I think, we don't want to be, I mean, we look at sort of theses and themes when we're kind of get together as a team thinking, is it, where is AI going? How should we invest in AI? Or where's fintech going? Or where's health going? And, these are kind of big themes that we discuss and look at, but we don't want to rule anything out because what is one of the joys, I think, you can have sort of theses about how the world is evolving. But I think for us, one of the joys um, of venture capital is just like to be surprised. Somebody has thought of something that you didn't foresee. And I think, some of our best investments have, and that's how we ended up investing in games, video games. It's just somebody thought of a unique way to address a market or a product or thought of a product you haven't thought of. So we don't want to be too prescriptive. I mean, we have our themes and theses, but we're also, you have to be open minded. And I think the element of surprise is what gives me awe. And I really like that. So
Yeah. So how's the internal governance like? So you're three partners, is that correct? Is that what you said? Or
yeah, we're three partners at the moment that started it. And our
yeah.
first fund, it was only the three of us because it was a small fund. Now we've built a team with a second fund, which has been fantastic. So there are eight of us full time. We have one associate, one principal, one data and modeling expert, and then we have a platform manager, which works with all our portfolio companies and organizes events and everything for our. And we also have our own lawyers. Everybody contributes as well. I mean, it's kind of nice that we have a lot of different minds around the table. The other thing that we've added is venture partners. We have three venture partners, one based in the UK, one based in Zurich, and one based in the US. And they
Oh,
all
really?
they all work for us at least one day a week, and they bring different experiences, and they really help our portfolio companies a lot. So it's a great to be able to add venture partners as well. So all in all, we're
So
a team
they
of 11 with the venture partners.
Great. So the
Yeah.
venture partners is they kind of give inspiration, but also do they help companies abroad? Like, because you mainly invest in the Nordics, right?
Yes, yes.
Or
They help, yeah, often, especially like, for example, our venture partner in the States, Tim, he has a lot of experience in sales into with health companies. So it's been really, really nice. So he has, he's so seasoned in the health sector. And obviously we have a lot of portfolio companies that work with it, within digital health. And he's been helping them a lot think about how they break into the US market, how you think about selling to clinics or individuals, what kind of regulation you need for the US market, what kind of sales team you need to build there. So he's been very strategic in helping our companies think about an US market entry. Our venture partner in Zurich, he actually works for Google as well. Very, very software engineering type of profile with experience of managing sort of hardcore software teams. So he helps a lot of our technology teams. Then we have a venture partner who sits in the UK who's working for X as well. A lot of experience with product and big tech, so she can often help product teams. So I think it's and then when we have our deal flow meetings, I think that they just add a different element because they don't they come from outside, so they add a different element to our deal flow discussion, and it's great.
Yeah, okay, so they chip in on the deal flow kind of discussions to give
Yeah,
new
as well,
perspective into it. Yeah.
as and when, yes, and
Yeah.
one of the things that I think some funds have venture partners for deal sourcing. I think we've been very lucky. We have an amazing team that does our deal sourcing, and we're also using AI, and then we also get deal sourcing through our other funds. And so we look at about 1,500 deals in the Nordics a year, and we're well tapped into the Nordic market. So we really like to use our venture partners more for helping our portfolio companies.
Yeah, cool. So how do you make your investment decisions, like, in the structure? Like, do you need to be anonymous at the end, or
No, I mean, so far we have been with our investment decisions that all three partners have to agree. We don't want
okay?
anybody in the end being, I told you so. So if
Yeah.
one partner doesn't feel this will be a good investment, then none of us do it. And I
Yeah,
think that that's really been part of our DNA from the beginning. And we still small enough. I understand if you have some huge fund with 20 partners, you're never
yeah,
going to reach consensus. But for smaller funds, it's really nice. We have, I think it's an 8-step investment process with sort of different gates. But, the aim is it takes a while to get to yes, but we can be flexible. And, if the company needs us to hurry, we can hurry and go through the 8 gates very quickly. But it's important that we check the 8 gates. But also, I think should take a shorter time to get to know, because I think one of the most terrible things that you as a VC
true.
can do, and I have been guilty of this in the past, is dragging to answer companies. And that usually happens if we're not reaching consensus or we really want to invest and there's something that isn't quite right and you don't want to say no, but you can't say yes. And I hate when it happens. So I think we're getting better at, if we're not going to invest in something, we're not going to. And as a founder, you must understand this, like drag founders
Yeah,
along.
sure.
So I
Yeah,
think, and we
yeah,
try to give constructive feedback when we go to nest. And if it's like sometimes there's a showstopper that can be fixed. So people have done that, and then they come back to us, and we've invested. So, or we've taken a second look.
it's also a great opportunity to provide value, right? If you look at something and then you feel, there's so many right things with a company, but there's some red
Yeah,
flags, and you can kind of
yeah,
pinpoint them, and they can actually
yeah.
work on them, right?
No,
But okay,
definitely. And I mean, yeah, hopefully. And I also think I find this also with our portfolio companies when they're out raising, and if they consistently get the same feedback from, they maybe talk to, I don't know, 50 funds, and all 50 funds say the same thing, then they think, oh, I have to go fix this. So it's really nice to try to give honest, constructive feedback.
yeah,
But then also sometimes I think you say no because you're not the right fit for that particular company. You don't have the area of expertise. You know you're not going to help them. And that's like sometimes the hardest no to say as well, because it's great company, great technology, but you know that the company will be better off with a different fund that has
yeah,
some insights that you don't have.
yeah. Okay, without having kind of going through all the detailed steps on the 8 decision gates, but like where do you have to kind of start reaching consensus? Where are you driving or getting the other ones involved? In which step? Like,
It's usually when we have a deal flow meeting every week. And then we try to go over every team that we've met that week. I think we know which ones do we do want to deep dive in. So that's the first area of consensus. So if there's something
okay,
we're not going to do this all week at all, so we have our deal flow meetings on Thursday. You may meet us on a Wednesday, and on a Thursday, for some reason, we decided this is not for us, then you would know right away.
yeah,
But I think, and then in the deal flow meetings, it's usually maybe somebody sort of has met a team, then they usually sort of one of the partners gets assigned to the deal, and we work together and decide whether we want to take it further. And we'll start asking questions and getting more information. And as I said, this process can take as little as a couple of weeks, and sometimes it takes longer because we're building a consortium of investors, or we're negotiating about price, or there's something that needs to be fixed, or something like that. So I think
Mm.
it's but um, but I think the things that we really look at. I mean, because we're seed investors and you don't really have commercial traction, maybe have a little bit of commercial traction, but you haven't hit product market fit yet. So it's really very much about the team. What are the capabilities of the team? Do they have knowledge of the industry? Do they have sort of different areas covered? We have invested in solo founders, but that's rare. Usually we sort of, it's usually a 2 or 3 person team that is like one is a CTO, one is a CEO, and one is maybe a COO or a chief commercial officer or something like that. So we will really get to know the team. And for us, that's very, very important. And often, maybe many VCs says they have to be good storytellers. And yes, it is great to tell a good story, but what's most important of all is that they have a record of execution and resilience. And so that's really what you look for a team. If you fall down, will you stand up stronger afterwards? And also, how quickly can you execute? Because one thing is to have a great vision and tell a great story, but can you take the small steps you need to be able to execute on that vision? So I think that yeah, those are
So that
things
doesn't.
that we really look for.
Yeah. Yeah. So does that mean that you only look for serial entrepreneurs, or do they have to kind of look back and say, kind of show some progression throughout the journey?
Yeah, no, no, yeah, we have invested in first-time entrepreneurs. We've invested people that have just
Yeah.
graduated from school. We've invested in serial entrepreneurs. We've invested in serial entrepreneurs that have been successful. We've invested in serial entrepreneurs that have. So I think it's more about the personality. I mean, I think one thing that we've seen that is often people leave people work know an industry super well, and they leave that industry because they want to solve a problem for that industry. And that
Mm.
often, and maybe they're founders that haven't built a company before, but they have a really good track record of working in some vertical. So that's, for example, we're in a company called Snappa that is founded by two people who came from the energy sector, really understand digital energy. They really understand the needs for power intensive users. So they've built a digital energy solution for very power intensive users like data centers and aluminum smelters and things like that. And I think you wouldn't have come up with that solution except because you're an industry native and you know exactly who the buyer is and how they're going to use your solution.
Mm. Yeah. Um. So you invest in seed. Any do you have any? Is there any kind of thresholds or anything that you need to have in place? Like some talk about a certain ARR goal, or someone told MVP, or is it mainly now back and kind of backing the right people at the right place?
The right
Uh,
people at the right place, and I think we also look at how long has it taken you to get to where you are, and why
yeah,
sometimes you see companies that are like, "Yes, I have 500,000 in ARR," but it's taken them 10 years, and then you're kind of, "Why has it taken 10 years?"
yeah,
Others will reach the same, so it's all about speed again, about execution, how
yeah.
quickly you've executed, but it also depends on how complex is your product, how complex are your customers. So, sometimes, especially now as we're moving more and more towards deep tech, stronger IPs, maybe I think that's where there are a lot of opportunities in Europe at the moment. So then you kind of maybe takes longer to develop a product, but you're gonna
Mm,
have or you're filing for a patent or something, so that can take longer. So I think it's as I said, I think to work really thrive in this industry, you have to be flexible and open-minded.
yeah, I
And
agree.
but yeah, but I mean, if you're building a very simple solution, it's taken a long time, then you kind of think, well, why is that? So then that's
Mm,
kind of maybe a showstopper or a negative.
mm. What's the typical check size that you invest? And can you say something about kind of the structure? Do you reserve something for follow-on investment and
Yes,
such?
yeah. So I think our average check size at the moment is just above 1 million euros. We have invested as little. Our smallest ticket size has been, I think, around 200,000. Largest initial ticket has been close to 2 million. So it really depends on where the company is at. I mean, with 200,000, it's really we have done some pre-seed deals. We've done some late seed deals. So we're kind of, but generally we're kind of in there at the seed stage, and then we're usually sort of around 1 million plus. at the seed stage. And I think we do follow on. We can follow all the way up to a B round. So we reserve, like I think of most venture funds do, with 40% goes into the initial investment, and then we follow on with the best companies and the fastest growing companies, and then we reserve 60% for that. But then I think if we've led the seed round, we won't lead the follow on round. You have to find somebody else to lead the round, which I think is very healthy risk management, because if nobody else in the world wants to invest, why why should we? So I think that's so we only lead one round.
Mm. Yeah.
But then sometimes we don't lead the seed round, and we could in theory lead a follow-on round.
So now you talked about kind of who you typically invest in, and kind of what you look for. Are there, on the flip side of that, are there any things that kind of that makes you a bit cautious?
Um, as I said earlier, maybe if a company's been growing very slowly with a product that doesn't require that much, isn't that complex, and is not, that would kind of, I would think of that. I wouldn't be a showstopper, but I would think about why is it that way. The other thing, which was advice I got when I set up Crowberry from Brad Burnham, who is one of the founders of Union Square Ventures in New York, and I think one of the most successful sort of early stage funds out there, was like, pay attention to the cap table. So I think it's, and especially if you want to get US investors involved at later stages, I think the founders and the people that work at the companies have to own a significant part of the company. So we don't want to take too much. I mean, each round should be take somewhere between 20 and 30%, depending on a need, but we don't want to take too much from the founders, and I don't think other investors should either. So sometimes it's been a showstopper because the founders have given away so much of the company that there is very little incentive for them to stay with the companies if things get tough. Because I think if things get tough and you own a lot of a company, you are willing to sort of ride the waves and do whatever it takes. If things get tough and you can just go and get another well-paid job, it is very tempting to go and get the very
Yeah.
well-paid job.
Yeah. Yeah.
Even though I do find in the Nordics that there's a degree of loyalty that you don't see in many other markets. I think people are very loyal to their purpose and their cause. So I think we don't do things just for money. We do them for purpose as well.
Yeah, that are some really interesting kind of topics, and it's kind of just down our alley, right? Being
Yes.
if we provide cap table management and such.
Yeah,
And
exactly, exactly. So I think that's fantastic what you're doing.
yeah, and we see this so
Yeah,
often.
yeah,
Like we see all kinds of different
yes,
things, but I
yeah.
think one of the things, like, I won't give my perspectives now. I'm going to ask you first, like.
I'm curious now.
Yeah, like,
Yeah.
what do you like now you're mainly looking at Nordic companies, like, but do you see anything differences, like nuances across the different countries in the Nordics in terms of cap table management, or the way that people think about cap table and the, kind of the way they do dilution and rounds versus
Yeah.
maybe other markets? I'm not sure how involved you are in other markets, but
Yeah,
any.
yeah, we've done a little bit in other markets. I think, maybe because Nordic founders are so loyal, sometimes they've given away too much too early. So I think, it's as a founder, you should be a bit selfish because you should also reserve for your team and things like that. So, also across the Nordics, I think, you see in the US, we're in a few companies that have a Delaware structure, so it makes it very easy to manage auctions and things like that. But I think, who benefits from your option programs, how big your option programs are. Um, I think sometimes I mean, I don't think this is with the good founders, but sometimes founders don't understand the value of options, or they will give away too much of their options just to advisors when they're early on. Oh, I'm just going to give my like marketing advisor 1% of the company because I own 100%. So, be very careful how you manage your options. The options are to give to people who are gonna stay with you long term. And, so I think that's something that I think founders should sort of take note of. And, there was a one deal that we didn't do because the founder was so worried about getting diluted by their own auction pool. they didn't want to have a 10% option pool because it would be too dilutive. And you kind of think if you're not willing to share with your employees, then you shouldn't be doing this. So that was a deal breaker for us. So I think
Yeah.
so I think things about how you think about options, and I think one of the things that would be really nice if we could do, at least on a Nordic level, is just have a universal tax treatment of options, because I think how the Nordics treat tax options varies market by market. I know in Sweden, I think they probably have the best option policy across the Nordics, and that's But I think if you look at Estonia or something like that, I think they have really good laws and taxation about option packages for startups, and it's something that the Nordic countries could learn a lot from.
Yeah. Yeah, I agree. And this is also something that we work quite a lot with, actually, stock options. And
Ah,
uh,
yes.
yeah, so we have our own kind of within our platform. Anyone can issue stock options and track stock options. We even have employee portals where they can get the motivation
Oh,
dashboards. You can see how much is vested, and you can exercise. So we track it all.
oh well.
So in Norway, this was tough, but the Norwegian Venture Capital Association, they kind of open open the doors for doing this slightly better. So now we also have a kind of tax efficient scheme for stock
Oh,
options,
fantastic. Oh, good. Okay,
which has
so I
been
should I should
kind of
talk to the
improved three
Norwegian.
times.
Yes. Oh
So
well,
latest
fantastic.
this year,
Yeah,
actually. So, but we're still
yeah,
behind, but it's fairly good for the kind of seed stage, Series A stage
yeah,
companies.
yeah. Also,
So
I think one of the things that I think for us as a seed fund, and I'm saying this from our benefit, is, but I think if you're taking in sort of pre-seed or even angel funding and things like that, it can often be smart to do convertibles rather than do a priced round. I mean, I think a lot of good founders do this, but sort of very young founders, if you're starting a company the first time you'll get an angel and they'll put a small ticket in which is reasonably dilutive, and it would be much smarter, and especially if it's an angel that hasn't invested in startups before, then it's like very good just to do a convertible or a warrant or something, so that longer term, and you get a price round when you get your first investment professional in. Because
yeah,
I've also seen that be highly dilutive, and it's nobody's fault. It's just people don't know any better
I agree.
because they're new
We
to the
also
game.
yeah,
Yeah.
I agree. We also see this quite a lot in Norway, and this is changing. We've Startup Lab introduced Slip, which is kind of a
Oh,
Norwegian
yep,
equivalent to
exactly.
Safe in
Fantastic. Yep,
Norway.
we know them well. Yep,
Yeah.
fantastic.
So
Yep,
do you have
yeah.
something equivalent in Iceland, or like do you use
Yeah,
the
we
Safe
do.
or?
Yeah, we use lots of safe notes, and sometimes with interest and sometimes with no interest. And it kind of also varies on the length and how close the company is to sort of having the next round. But this is used a lot. And I think it's also just everything has been so standardized in terms of documentation, which I think is great. So I think this is like, it makes it very easy for founders to think, what should a early stage convertible look like? What should my pre-seed round look like? And what should my seed round look like? So I think there's a
Sure.
lot of information online of
Yeah,
what your documents and what percentage you should be giving away. Like if you go with the startuptools.org or something like that, I think
yeah,
there's a lot of valuable information there for founders.
yeah.
Yeah.
So this in Iceland, do you use the Safe, or do you have like an Icelandic version, like
There's
uh
something, it's it is broadly a safe. It's called something in Icelandic, but I
yeah,
mean, I think it's also, it's
same
broadly
dynamics?
like a safe. Yeah, exactly.
Yeah,
Or like a slip or something. So I think it just,
yeah,
for each country, it has to like be adjusted to local law, but it's more or less the same.
yeah. And for all founders kind of listening in, this is kind of a Safe is a simple agreement for future equity. Slip, startup lead investment papers is basically you get the money now. You don't argue about valuation. You think about it later, and then at later stage when there's a more professional investor coming in, then you set the price and you convert based on a discount or valuation cap, which also means that you can give away equity early days to kind of to co-founders and team. So it's a great vehicle to get started with, I think.
Yeah.
So
Rather
great.
than trying to price the slide deck, which it often is in the beginning. It's just like, yeah,
That's the one
yeah,
thing, and then you have the dilution, but in Norway as
yeah,
well, it's kind of the tax, right? Once you have a
yeah,
price round, then it's the wealth tax or the extra tax or the kind of the tax on if you give out shares.
yeah,
So it's
yeah,
you kind of you lock yourself in a corner without even
yeah.
knowing.
No, exactly.
Right. Let's talk a little bit about the pitch decks.
Oh, okay. I love pitch decks.
Yeah, yeah. I bet. You must be kind of a bit tired looking at them by now, or is it always still fun to receive them and go
It's
through them?
always still fun because, I mean, there's a certain pattern to a pitch deck, but there's always the uniqueness around the product and the team and the market. So it's almost like, I think it's like, because I think pitch decks of how you build them up have become relatively universal. And again, you can get a lot of information on how pitch decks should be structured. It just online. But I think one of the things that for me, it's like opening a little advent calendar. And now they're going to talk about the market and how do they address that? And now they're going to talk about the team and how do they address that? And now they're going to talk about the product. So for me, it's like a little advent calendar every time. I love it. It is
Yeah.
great. And as I say, I think it's really important if you're an early stage founder to talk about your team and your market and how you're going to invest in seeding and developing that market. Because I think most Nordic founders, I think Danish founders maybe less, but I think if you think about the other Nordics, we spend a lot of time thinking about product, which is super important. If you don't have a product, the company doesn't exist. But almost, I think one of the things that we've been seeing is you need to invest as much in your market, in your sales and market as you do in your product. And it's always very easy to add to the product. It's harder to develop the market really and find the right team for that. And then you're often hiring outside your country because you need. So I think really be thoughtful of how you're going to build your market and invest in your market. And the other thing I notice with Nordic founders, as opposed to maybe US founders or something like that, is sometimes, and I think it's we're very honest and we're very accurate people, and so we don't want to promise too much. And then sometimes if people are doing, they're, doing, their 5-year plan or showing where the company can go, is like, very cautious and careful and things like that. And I think for me, if you really want to build, see where your company can go. And, I've been involved with over, I don't know, 50, 60 startups, and nobody has been from day one, been exactly on plan. So, but, just having this kind of plan, you can control your costs, and that's the one thing you can control. You can't control you can influence your sales and you can influence your revenue, but you can never control it. So I think it's almost a thinking when you're starting a business, think about if you got every resource you needed, you were able to hire all the people you needed, you got all the funding you needed, and then what would your business look like? And it's always nice to see like a version of that dream plan in the beginning, because that shows you the size of the opportunity. But it's also good to have, like, a very tight budget where you control the costs and you know exactly how much money you have now and how you're gonna use it. But also nice to have, like, a dream plan. Where are you gonna go? How big is this opportunity that you have?
Yeah, and this is also like being in seed stage. This is always the hard part, right? Because you need to sell your
Yes,
vision, right? And
exactly.
and then you go to some early stage investor and they want to see your 5-year plan. It's like
Yeah,
you're gonna be wrong. Like I guess it
yeah,
says something about your thinking, right?
yeah.
But do you expect to see the financial slide, or do you expect to see kind of if we succeed, this is
Very
how the
high
world works?
level
Like,
is how it look, and I think this is, I mean, I get it for, like, honest founders who kind of wanna do things correctly and right,
yeah,
and, and you kind of want to be realistic, but it's also nice just to think about, if everything works out, what will it look like? And then we know that not everything works out all the time, and,
yeah,
there will be kinks in your growth, and, but as long as you kind of adjust to that along the way.
yeah,
So I
yeah,
think we only really look at sort of the next 12-month financials in detail. Because, if we put our funding in, how are you going to use it? What do you expect to come out of it? But it's nice to see like a 3 to 5 year trajectory.
yeah. But do you expect to see that in kind of in the short pitch, or is that's kind of more the follow on like information that you?
Usually the follow on when we're further
Yeah,
along, but not
yeah,
like not maybe first pitch is like team, opportunity, market,
yeah.
product,
Yeah, yeah, and what about proceeds? Like, do you want to
and
see the?
competition as well. I think if
Yeah,
you have to show that who else is in the market.
yeah, yeah. How important is it that you understand what's the next step, right? Now you're raising capital to do something else to typically raise more. Like, how important is it for you to understand their thinking about the next steps? kind of the
I
de-risking
think it
or
is,
value adding?
yeah, no, but I think that is actually, that's a good question. And I think it is relatively important. Also, if you think about it, sort of how do okay, we're going to invest in your seed round. And let's say you have 300,000 or 400,000 revenue. And A rounds now have become like 2 million. Most A round investors want to see 2 million in ARR or
Yeah.
that you're growing super quickly. And then it's kind of like, how are you going to get from here and to 2 million in, let's say, typically maybe 18 months. And then you kind of should have some customer pipeline, who you can address, who can get you there. So I think that, if we really invest, we have a relatively detailed discussion around that.
Mm.
And so how you're going to build out to the next round. It doesn't always work. And sometimes companies surpass it. So, but I mean, and you really have to control your costs. And especially these days, because as we've seen in the last 2 years, rounds are fewer and further between. So I think people really have become a lot more cash conscious. And when I started in venture in 2009, I remember I met this head of some venture studio at MIT, and he had this phrase: cash flow is more important than your mother. It's like, how are you going to generate your cash? How are you going to preserve your cash? And it's always in my back of my mind. And I think those days are back. It's like, if you're leading a company, you kind of just really, what you really need to make sure that you hire the right people and that you never run out of money.
Yeah.
So you can pay those people. And I've seen some great founders, they're very careful with when they hire, who they hire. And, it's very tempting to overhire because they're like, well, I have 300 employees. Aren't I great? We're growing. But if your revenue isn't reflecting that, it's almost like throwing money out the window. So,
Yeah.
think carefully about every hire, especially in the
Yeah.
early stages.
Yeah. So initially you said like there's a ton of information out there about the pitch decks, but now I guess a lot of founders reading the same things, and
Yeah.
it's the same style of the pitch deck. Is that a good thing or is it a bad thing?
I think it is. I mean, I think there's a certain predictability in it. And at least then, they're covering everything. So I think,
Yeah.
Um, when I started in venture, especially a lot of Nordic founders were just so focused on product that
Yeah.
you didn't, see anything else. And now I think people think about how they build a business as a whole. So I think that's a good thing. And as I said, within each category, there will be something that surprises you.
Yeah.
Your product is going to be unique. Your opportunity is going to be unique. Your team is going to be
Yeah.
unique. And it's like, and I mean, I think it's the same as when funds are pitching. There is a formula for pitching, because we have to pitch as well as a
Sure.
fund to raise our funds, and there's a formula for the way funds pitch
Yeah.
almost.
Yeah.
But then there is, within each slide, you have to bring out what makes you as a fund unique.
Yeah. So is that something that okay, so that's kind of the next question then. It's like, are there anything like are there typically lost opportunities in pitch decks? Like should they, again, for instance, focus on why should we win? Like why are we unique for this opportunity? Or
Yeah, people often do that. I mean, like the why us, why now? So it's like, it's like, why is this the right time to launch this product? And why are you the right team to do it? I mean, that's kind of what people discuss a lot. And that's kind of, so I think that is something that people have to be aware of. I also think it surprises me how many pitch decks we see where the company doesn't show like the global competition. So they will maybe show this is the competition in Norway or Finland or Denmark, but you want to see like born global companies and you want to see the global competition. Also, for all Nordic founders out there, don't use your local currency. I think especially if you're pitching to international investors, it also surprises me that you have NOK or Danish krona or Swedish krona, and you always have people, sort of like doing the math in the head. Use euros or dollars. I think if you're pitching to international investors, just
yeah,
makes it very easy. So
yeah,
very basic mistakes that I've seen confuse a lot of, for example, UK or US investors.
yeah. Yeah, and I guess if we ask for money in Norwegian NOK, it sounds so much, but it's so little.
Exactly,
The
exactly.
currency in
I was
Norway
like,
now is not
"Oh,
great.
yeah." Exactly the same, and I said, "Expect us to invest billions?"
Yeah, yeah.
Yeah.
No, that's it's funny. Okay. Right. So we've been through quite a lot. Kind of, is there anything in particular that you, after seeing all these pitch decks and all these founders, or like you know so much by now, right? Are there any things that you would um, advise or any good advice you would give founders on their journey, either in kind of in general when they're kind of building a venture company, or also
Yes.
when kind of fundraising? So it's kind of two
Okay.
questions there.
If we start with the first one, we're building a venture company. I mean, you are in control. I mean, I think this is also what I realize. If a founder doesn't want to do something, it doesn't get done. So I think sometimes you see founders push it because I think it's very standard in investment documents to be reserve matters that you have to get investor consent for A, B, C, and D. But usually it's like things don't happen without the founder. So I think the founder title is the most important job title in the company, and investors are investing in you. And you, so I think that's very important. Having said that, we as a fund always think, a lot of funds say founders first. We kind of say firm first or company first. So we take every decision once we're invested in a company. We take every decision thinking, and which is just good corporate governance, is what is best for the company. And then we kind of think of the other shareholders, the customers, the employees, and the co-founders. So I think, and that's a really good way to address problems at a board level. So we always do that, and I think you should look for funds that do that as well, because those are funds at least that I love working with. And I think also for founders, sometimes you can get just one fund. I think that can sometimes be dangerous because you're beholden to one fund. So I think, and sometimes, we'd love to take the whole round because it's a great opportunity. But if you really think of the company first, it's usually better for companies to have more than one fund. One fund can be fully invested where the other one isn't, so they can support you. Also, what your investors should bring is a network. And so if you have two investors filling the round, you're going to get double the network often. And also, if you have complementary investors that can bring different things into the board discussion, I think that's really important. So I think if I were a founder, I would want two investors that I trusted, and I would, yeah. So I think that's sometimes because it's just easier just to get one that leads around and then you're done. But if they, for some reason, can't do the follow-on investing, or they lose interest, or the person that was on your board leaves the fund, then you're kind of stuck. So I think it's great to have more than one investor.
Yeah. Yeah, I agree on that. So it's quite interesting what you said. There's like we do help a lot of companies as well, kind of on the venture building part,
Yeah.
and I we say exactly the same as you. Like
Oh, good.
we need
Okay.
founder that comes on board with us, but then it's like
Yeah.
you need to look at both in terms for the company and the founders and the team when you look at equity structures, but also
Mm,
when you fundraise, right?
yeah.
And because I see a lot of early stage investors start asking for strange things and preferences, like even before the kind of the seed stage, and then a lot of strange things can happen. Also,
Yeah.
different uh, price rounds, like certain things they want to get into the deal that will not be great for founders or the company,
No.
which at the end of the day also will hurt investors. So I think
Exactly. So I think, yeah.
early, yeah, early stage having that, or always, I guess, but it's so important early stage to think what is the best for the company so that we can continue to grow this company together.
Yeah.
Uh, yeah,
No, exactly. From sort of foundation through exit. Then
yeah,
I think it's kind of, and it's also the sort of responsible thing to do and the sort of good corporate governance, but I think it's also the best way to make money for everyone.
yeah,
So, yeah, and I think that, and I think that when it comes to pitching, I think sometimes I see the most successful rounds is when they just, you give yourself a certain time. You prepared really, really well for the fundraise. You know what, you have your investor list. They're not all going to say, you have to kiss a lot of frogs to find your prince. So you kind of, it's good to meet with a lot of investors. And if you have board members that can help you grow the investor list or can make warm intros or get the right feedback that maybe the founder wouldn't get from investors, I think that's super valuable. So leverage your board to help you with investor relations. Um, be very organized before you start. I also think a lot of founders which we love to do at Crowberry before our portfolio companies go out and pitch for their next raise, is like get feedback from us. How does this pitch strike investors? We see a lot of pitches, so we're very happy to help set set the company up for success. And so I think those are all important things. And be genuine, be authentic, be yourself. Because we can also always, there is like a BS meter somewhere that people can tell if you're not authentic, not genuine, and not yourself, which I think 90% of founders are. And if I had to choose, because, we have seen founders that are very slick at presenting, but terrible at running a company. Then we've also seen founders that are terrible at presenting and great at running businesses. I'd rather take the founder that's terrible at presenting, but great at running businesses. But ideally, I think you have to be both. So if you're not a great presenter, get a co-founder or get a colleague or something to help you with that. And, also, a thing that I notice sometimes in presentations, because most presentations happen online now, so it's more difficult to get to know people. I mean, even though you get to know them, when we first started Crowberry, people would show up in our office, or we'd meet teams when we were traveling and things like that. Obviously, it's really nice to meet the teams, but so much happens digitally, is that whoever is in the pitch meeting, it's nice for them all to speak. Because sometimes I'm in pitch meetings and there's the CEO is the only person that speaks, and you just don't get to know the other people that are clearly important to the meeting because they're in the meeting with them. So, prepare in advance and plan in advance who's going to say what when.
Hmm.
So as a fund, we get to know everybody in the meeting.
Yeah. How often do you see like founders coming alone and presenting alone versus bringing a team or co-founders? And do you have any preferences?
No preferences.
Yeah.
Often the initial meeting will be sort of one founder. Follow-up meetings, it will be, two or three, however many founders there are. We always have a meeting as part of our mini gates is a so-called partner meeting, which is a casual meeting between all the founders and all the partners and the investment team in Crowberry, just so we get to know each other as people. And I think that's very important. And at some stage in the investment process, we get to meet the whole founding team. But I think, if you're going out there and meeting a lot of investors and you're building a product and you're selling a product, it's understandable that,
Yeah.
like not all four founders want to be sort of caught up in the first intro meeting.
Hmm. And you have offices in Iceland and Stockholm and in Copenhagen, right?
Denmark, yeah, yes.
Yeah.
I think offices may be fancy. We have desks in Denmark and
Yeah.
and Stockholm, so we have people working out of those three places. So
Yeah. Cool. Okay. I can see that we're closing up on an hour, so I think we're gonna round up. Do you have any last words? Anything you want to say before we? Thanks for today.
first of all, I'm very excited to hear more about what you guys are doing, so we can do that later.
Yep.
I think, I mean, to the founders out there, I think, love your journey. I mean, starting a company sounds glamorous. It's hard work, but it's super enjoyable. And so I think, enjoy the journey, but it's also a journey that can take up to 10 years, and we all know that. So,
Yeah. Yeah. It's an important reminder.
yeah.
Yeah.
And also, one of the things I use for myself, because I think working with startups can be very stressful, is like, but I'm also very aware that you just making sure that everybody's preserving their mental health. It's like nobody died. I think so I think this is the thing. They're just companies. It's urgent to do things and important to do things, but this is not life or death. I do this for myself because um, it keeps me calm to think, they're just companies. And
Yeah.
but no, yeah. So I think it's important to do that because
Yeah.
otherwise you can get myopia and stop seeing everything else that's important in the world.
Yeah, and I agree. And I speak with a lot of founders, and I think one of the things I think in the Nordics we're kind of good at taking a holiday or taking breaks,
Yes. Yeah.
and I stress that it's super important for sometimes to just take a step back, get
Yeah.
some inspiration. It's a marathon with a bunch of sprints, right? But
Exactly.
you need
Yeah.
to get some time off to really get the clearer picture and outcome from the daily tasks.
Exactly. That's where you get when you get your imagination back, and you can see
Exactly,
that. Yeah. Yeah.
100%.
Yeah. So that's good words for our because we're just about to go into we're going into July holiday season. So
True, true.
yeah,
Yeah. So take some time off. Yeah.
yeah,
Yeah.
I'm planning to.
Good.
But I
Okay.
hope you do as well.
Thanks a lot, Helga. This was a pleasure. So great conversation, and I'm looking forward to catch up with you later. So thanks for
Yes,
joining.
likewise. Thank you so much. Thank you for the opportunity. Thank you.